afternoon. I want to thank everybody for logging in and calling in today on our webinar on LLC tips, tricks, and best practices. We're going to have a guest speaker on today who's going to help share kind of the things to do, things maybe not to do when you're looking at investing or using an LLC that probably will apply. The tips and tricks will apply whether this is for an IRA LLC, whether this is for your business LLC. So hopefully, everybody attending today will have some great education, get a lot of good information to put to use in their daily business or their daily lives as well. My name is Scott Maurer. I'm the Director of Business Development with Advanta IRA. I've been with the company for quite a while now. I teach a lot of the classes that we have. I oversee kind of the marketing strategies, the new business strategies that we have here at Advanta IRA, and I welcome you to participating in the webinar if this is your first time. I hope you enjoy it. If it's somebody who's been here many times, then hopefully it means we're doing something right. Now, as far as the class today in the webinar, if you're listening to the live presentation and you're here with us right now, please, if you have questions, you can type them into the chat box on your screen. Whether the question is for myself or whether it's for our guest presenter today. Just type your question in the chat box. We'll do our best to get to those questions if we can. We'll hopefully have some time at the end to answer a bunch of questions and maybe throughout the presentation as well. If you are listening to a recorded version of this webinar, my contact information is here on this slide. The contact information for our presenter will be given later as well. So hopefully you can reach out to one of us with additional questions, if you would, after you watch the recording of today's webinar. Now, a quick disclaimer on Advanta IRA, things that we do and don't do. And a couple of things that we don't do at Advanta is we do not provide legal, tax, or investment advice, and we don't endorse any particular products. So we are not going to tell you whether an investment is a good or bad idea. We are also not going to give you legal opinions or tax opinions regarding some of the issues involving your self-directed IRA account. We do get into some of those issues, and we like to do things like we're doing today, which is to bring in somebody who can talk to you more, maybe give you a little bit more guidance. But we don't necessarily endorse, again, any particular products, strategies. When it comes down to making decisions regarding your account, that's when you do need to talk with an advisor, talk with a CPA, talk with an attorney to help get you on the right path with those questions that you have, and we can certainly refer you to some of those people as well. Just a quick background on Advanta IRA. We are a self-directed IRA administrator. I'll get into what that is in just a moment for any of you who are new. We do use the bank, the cash that we hold for our clients inside their IRA accounts is protected through FDIC. We have currently over 5,000 active accounts at Advanta with over $700 or $800 million of assets that we hold. And I think the benefit of using our service is that we have an account manager system where each individual client is assigned to one account manager, which gives you a much more personalized concierge experience when it comes to dealing with your particular account. We are also very committed to providing education to our clients and prospects as well. Again, today's webinar is just an example of that. We're bringing in an outside party to share some information, but we certainly have our own internal webinars, seminars, and events for individuals to come in and take part of. Whether you're a client for many years, whether you're a new client, whether you're someone thinking about being a client, we want you to be educated. We want to provide you with that educational material and educational opportunities, whether that's through the events that we have, like the one we're having here today, whether it's our on-demand videos on our YouTube channel, you can go back and watch at your convenience, or through our blog and other offerings as well. Now, just a quick back on why most people have not heard of self-directed IRAs. Again, not necessarily applying to anyone in this call, because you're here and you've heard about us. Most people are not familiar with self-directed IRAs because most retirement accounts are held with brokerage firms. People hold, firms that are selling mutual funds, stocks, and bonds. They're not necessarily allowing their clients to invest, and they're certainly not advertising to their clients that you can invest in alternative assets like real estate, private notes, LLCs that we'll talk about today. But IRS regulations do allow for a very, very broad range of investments that you can make inside your account. If you have the will will help you find a way to make that particular investment. Again, whether you can look outside of the normal kind of conventional assets of mutual funds, stocks, bonds, maybe a CD or a money market account at a bank, and invest in something that you can control. So get your money maybe out of the stock market into something that you understand, something that maybe lets you sleep a little bit easier at night as well. Now, the types of plans that can be self-directed, any type of IRA, whether it's a traditional Roth, whether you own your own business or work for a small employer and you have a SEP IRA or a simple IRA, those can certainly be self-directed. We offer solo 401k plans for self-employed individuals. So if you work for yourself or you have a small business, the solo 401k plan, the SEP or the simple IRA just give you larger contributions on an annual basis than do the traditional or Roth IRA. But any of these accounts can be self-directed, and included in that, but maybe not on this slide in particular, is any former employer's plan. If you have an old 401k, you have an old 403b, a 457, a pension plan, thrift savings plans, those are all employer-based plans. As long as you no longer work for that employer, they cannot restrict your ability to move that money out of the plan into a particular IRA. Now, all of these accounts that you see on the screen do have caps, and someone just asked the question, is there a cap on a SEP IRA? There is a cap annually. The IRS places different restrictions on how much you can place into each of these accounts. For traditional or Roth, the most you can contribute out of your pocket is $5,500 or $6,500 into that account. And with a SEP IRA, it's a formula. It's up to 25% of your compensation to a maximum of $54,000. So the IRS does place caps within these accounts on how much you can contribute out of your pocket, but there is no cap on the earnings within the account, and there also is no cap on moving money between these accounts as well. And so you can certainly open up one of these accounts, and once you have a self-directed traditional or a self-directed Roth IRA or a self-directed SEP IRA, you will then instruct Advanta as to what you want to invest in. A lot of the investments we hold at Advanta are related to real estate, whether that's buying a rental property or rehab property, whether it's setting up a single member LLC, things we're going to talk about in just a moment, and then also with our guest presenter today. But you can also invest in futures trading, forex trading, private placements, hedge funds, private stock. There's a lot of different investments that are out there if you're looking for them. Again, your typical bank or brokerage firm is not going to make you aware that these assets are even possible or something you could do, only because they don't hold it. It's not because it's against the law or against the rules. It's just simply because they're not willing to hold it, so they're not going to advertise to you what else you could do with your money. But these types of assets are things that we hold all the time for the clients that come to us. Again, a lot of them centered around real estate, notes, mortgages, and LLCs in particular. And one of the strategies, and we're going to talk about briefly, and then again allow our presenter to expound on it, a lot of individuals, when they are looking to self-direct, and this is more a little bit maybe step 2 of the self-directed education if you're just getting started, but a lot of people want to have more control over the funds within their IRA account. They want to be able to write checks to buy properties at auctions, or to buy tax liens, or maybe to pay their different vendors they have. They bought a rental property, they need to pay the roofer. They want the checkbook. Checkbook control is typically obtained by using an LLC within your IRA account, where your IRA is the 100% owner. You are named as the manager of the LLC, and this then allows you as the manager to write checks out of a bank account that is set up in the name of this particular LLC. So you have your IRA not send funds to a real estate closing, but instead have your IRA send cash to a bank account that you set up for this particular LLC. Now, we do advise and encourage you to talk with an attorney or an accountant or someone familiar with these structures to make sure you stay within the rules. There are companies that offer a one-stop shop where they'll set up the IRA, they'll set up the LLC for you, and they charge you a couple grand to get this started. You can use your own attorney, your own accountant. Some people have even done this themselves and pay far less in fees in order to get this checkbook control started. Just a quick illustration of what the checkbook control and how it works. Take the first instance where someone just buying real estate with their IRA account. Joe would open up his account, fund that account by doing a transfer or rollover from an existing IRA or 401k account, get that account issued, and then when he identifies the real estate purchase, he's going to draft the contract in the name of his IRA account. So it's important that on that real estate contract, his IRA is listed as the buyer. Joe will approve the contract. We will execute the contract, ultimately working then with the title company and the closing agent to make sure all the documents are drafted correctly in the name of the IRA account itself. So when Joe's making this purchase, this is his IRA buying the property directly. We will make sure that Joe approves all of the documents for us first. We will then sign the documents, send the funds for closing, and after closing, we handle all of the income and expenses. So this tenant sends the rent directly to us. We deposit it to the account. Joe has any expenses, he sends us those bills. We get those paid out of his account and do all the record keeping for Joe. So Joe doesn't have a checkbook. He simply he sends those bills to us to be paid. He directs his tenant to send the rent checks directly to us, and this is certainly a fine way to administer your self-directed IRA account. That's what a lot of people end up doing. But for another segment of individuals, they're really interested in getting much more control in the process. So we kind of flip the switch a little bit here. Joe instead wants that checkbook control. The process is a little bit different. So instead of Joe, same thing, Joe getting an account set up, getting money transferred in, but rather than telling Advanta that he wants to buy a piece of real estate with his IRA, Joe is going to supply us with the information on this new LLC that he's establishing. So instead of asking for the real estate contract and then working on closing documents, settlement statements, etc. with Joe, if he's going to use a checkbook control and set up an LLC, Joe needs to work with us on making sure that the LLC is properly set up, make sure that the operating agreement for the LLC, which is the ownership paperwork for the LLC, shows his IRA as the member. And again, Joe needs to review and approve all of this. So it's instead of, again, looking at a real estate contract and those documents, we instead want to see that the LLC that he's setting up properly shows the IRA as the member. We ultimately then sign the operating agreement for Joe's LLC. And instead of issuing a check or a wire to the closing attorney or to the title company handling that closing, we will issue a check out of his IRA payable to his LLC. Joe, as a manager of the LLC, can go take that check to a bank, open up a bank account in the name of the LLC, deposit that check into the LLC bank account, and now to go buy his real estate, Joe, as the manager of the LLC, will sign the documents. He'll make sure that the contract is listed in the name of the LLC. He will go through that closing process, signing the documents in his position as manager of the LLC. Once the property is purchased, Joe will then receive the rents from his tenants, deposit those into his bank account. Any expenses that he has, Joe can write a check out of the LLC bank account to pay those expenses. And this is, again, why it's called a checkbook control LLC or a checkbook control IRA, because at this point, Joe has a lot more control over those funds, and it doesn't have to come to Advanta each time to write checks. Now, when you're investing in this type of entity, it certainly works for a lot of individuals, but for others, there's certainly some hiccups. There's some things you need to do if you're doing this LLC to make sure that it's you're keeping up with the right records, you're keeping track of all your expenses. So that's why we brought in Carlton Johnson of WaveRen LLC, who's going to talk to us today about the tips, tricks, and best practices of operating your LLC. So we've brought Carlton on board today. He's going to let him take over now and really tell you more about how to run the LLC. Now, I would encourage you, if you're listening live, if you have questions, please type those into the chat box on your screen. Either myself or Carlton will get those answered. But Carlton, are you there today?
Yes, I am.
All right, Carlton. Well, I'm going to turn it over to you. I'll let you introduce yourself a little bit more and go on with the presentation. And again, anyone has questions, please type those into the chat box.
All right. Thank you, Scott, so much, and thank you, everyone, for joining us on this afternoon for the webinar. I want to give to you some of the best tips, tricks, and best practices I've encountered in using LLCs. I want to give you an overview of, first of all, who I am in my company, and there's a specific reason why I'm doing it this way. Who is WaveRen? WaveRen is a hybrid business that incorporates technical elements of compliance services, bookkeeping, tax, and accounting, with advisory services such as consulting and analytics. So I'm actually the member and manager of WaveRen. This is me. I'm Carlton. I've been a licensed public accountant since 2007. I have 15 years in micro enterprise and small business, 10 years in corporate finance and accounting, and 2 years as an IRA administrator at Wachovia Securities, now Wells Fargo Advisors. So what I want to focus on today are some of the best practices I've come across in not only in setting up LLCs, but also in executing their business plans. And so these are some of the key tips and tricks that I found while planning and helping other business owners with establishing their LLC. So LLCs we know stands for limited liability companies, but for the purpose of our presentation, we'll say legal looks control success. And it's all about looking like you are in business. So it's not necessarily the art of deception, it's about the art of development. So the first thing we're going to take a look at is record keeping. Record keeping is a big piece of this, where we're talking about bookkeeping, cloud storage, record retention schedules, and document security. We're also going to look at your business presence. How do you appear to other people in the business community? Looking at the branding, the customer service, and relationship components of your LLC, as well as banking, which is another huge piece. Looking at and addressing these bullet points, not necessarily in detail, but giving you an overview of how these bullet points work for location, service, and fees for your company, and finally wrapping up with looking at how your LLC is associated with all the stakeholders that will come and join you in your business venture. Okay, so for the first part, we're going to talk about record keeping. Okay, so record keeping is more than just bookkeeping, and I know many people take a look at record keeping and they imagine a file cabinet, a huge file cabinet in their head with tons and tons of paper, and that used to be the way we did it a long, long time ago. Now that's no longer the case in many cases. But what we're doing is in record keeping, we're looking at not only the document retention, which we're looking at contracts and we're looking at receipts and proofs of purchase, but we're also looking at the bookkeeping component and also performance reports that go to external parties. So parties that may be the bank, or if you're in government contracting, the government, those are all part of the record-keeping process. And it's important because, number one, it creates an easy audit trail. So, and that's mostly in the bookkeeping and the records retention area. Also, if you have a solid record-keeping system, there's a doctrine called the piercing of the veil in law, and that's something you don't want to happen. So you want to make sure that your LLC has all the legal standings of a legal entity without having anyone going around and trying to get to your personal assets. Also, having bookkeeping in place makes the reporting relevant and reliable, two very essential elements for banks and for investors. Also, it facilitates easier and meaningful planning, makes financing easier, and, of course, creates organizational harmony. So can't emphasize the harmony part the most, because when you talk about your business to other people, at least from a financing standpoint, you want to be sure that everything is organized. You can put your hands on everything you need to address any element in your business. So I'm going to introduce you to the world of bookkeeping and accounting.
Carlton,
Yes.
if I can, let me interrupt. I just want to make sure. Somebody asked the question that wanting to know, that they said they have a corporation and wanted to know if some of this information would, what you're talking about apply to corporations as well. I know we're talking about LLCs, but is a lot of this good information for those entities also?
Yes, absolutely. What I do is in this particular presentation addresses the general practices for any business entity. We've just tailored it to LLCs, but much of what we will discuss here will apply to corporations as well.
Okay, great. Thanks.
Mm-hmm. And so what we're going to do is now look at bookkeeping versus accounting. I know that in the broader sense, no one really understands how that whole system works. Bookkeeping, for the most part, is keeping a detailed record of financial transactions in your company. So the first part of it is the measurement and recording part. That's taking a look at the receipt and putting it into your journal and then your ledger, and that's going into your accounting system. The second part of that is the reporting and analysis, which covers the accounting part and also spears off into the reporting part. That shows you where you are with respect to your operations, how well you're performing, how your assets and liabilities are set up in your balance sheet, and also look at how cash is flowing through your business. So the bookkeeping inputs. This is the part that most bookkeepers and accountants spearhead first, and that we get the shoebox or the black paper bag or whatever, and we get a lot of receipts and statements, contracts, invoices. These are all bookkeeping inputs, so we can begin constructing your financial record for the business. These are key and very important, and a lot of this stuff can go into document storage that is cloud-based now. So you don't have to keep all this stuff in, file cabinets forever, although I will talk about retention later. You can keep a lot of stuff in the cloud, and it is just as good as having a physical piece of paper. So your accountant or your bookkeeper should be asking you for the invoices, for statements, contracts, invoices, bills, and all other types of information, up and including to the proof that you filed your LLC. So, and also your EIN, your federal tax ID number. So if they're not asking for that, please give it to them so they'll have it, and they'll have a document and record of it to put into your bookkeeping system. Okay. So the next part of it is the accounting part. This is the part that is what we call the magic wand in accounting. We take all that information, we put it into the accounting system, and we create the statements that give you an idea of how you're performing, what you own and owe, the cash flow that's coming through, needs for capital. So hopefully as we develop other statements, it'll also show where you need to develop your capital meaning your assets, cash, buildings, things like that. And also it will create the schedules that show what you would need for debt servicing. So if you took out a loan for your business, if you went to your local bank and you took out a small loan, your report should also show you what's available for debt servicing, making sure you do the interest payments, the principal payments as well.
Hey, Carlton,
okay. So now, yes.
If I can interrupt again, sorry, question. Somebody asked, what's the example of a bookkeeping system or an accounting system that you would use? Or do you have any favorites that you think are best out there for people to use as far as software?
Absolutely. Shameless plug. Yes, WaveRen actually uses a cloud-based system called Xero, Xero, for all of our clients. We have some clients on QuickBooks, which is more familiar to the tried and true crowd, and then there's another one specifically tailored for the micro entrepreneur, and that one is called Wave Accounting. It's not a WaveRen product, but it's actually called Wave Accounting. Wave Accounting is a free application. It is also cloud-based, and it allows any entrepreneur to plug in their banking information, do any type of accounting, and it does the basic statements for any business. So there's several systems out there. You just have to find the one that's best for you. My advice would be to talk to an accountant to figure out what system is best. Part of it is cost, but the other part is making sure you get the information you need out of the system as you're going to be dumping all of your information into the system. Okay? So we're putting this, no problem. We're putting this all together, and we have the accounting information system here. So this is looking at the accounting system that will keep all of these elements together. So the receipts and statements, contracts, all the things that hit your hands first, the source documents, will go into the accounting system. As I mentioned with Xero, and I mentioned with QuickBooks, you actually have a virtual file cabinet in both of those systems that will store these documents. If you scan them in, it will store the documents. So if you have a particular contract with a vendor or a client, you can associate that particular document with that vendor or client. The accounting system will also print off the primary statements that you'll need to communicate the health of your business, also how it's performing. These are the statements that your bank and your investors would be interested in, the income statement, balance sheet, cash flow, and also other information reports that would be essential for other stakeholders outside of investors and banks. So if you're doing business with the federal government, or if you are in a partnership with another business, those would be the information reports that those parties would be interested in. In addition to that, you would need also that information yourself. So all the way over to the left, you'll see owners and stakeholders. So those are the statements that you'll need in total to see where you are in your business and how well you're performing. So the next step is to take a look at the attention to retention. So just to give you an idea of how long you should keep things around, bank statements and receipts, about 5 years. Although I would say in most cloud-based systems, it will stay in there for as long as you have the cloud-based service, so it doesn't fall off. Tax returns, keep them up for 7 years. Contracts, for as long as that particular contract is in effect or enforced. So it could be a long-term contract, short-term contract. For as long as that contract is in force, plus the warranties, the amendments, and everything else, that's all you should keep those. Annual financial statements, keep those for about 5 years, although the financial statements will change and the data in them will change to have a basis for comparing prior performance with your current performance. You'll need to have a basis for that. Bookkeeping systems pretty much knock all that stuff out of the park, so they'll have all that information there. Also, your organization document, insurance, long-lived assets, all that you'll keep pretty much indefinitely because that's going to follow you throughout the business until you either sell it or close it. So that's pretty much the retention schedule basically for any business. Okay, so we have cloud-based solutions. So we're going to hop out of the accounting for a second. We're going to go into cloud-based solutions, and this is for document storage. So the most popular ones nowadays, everyone's heard of Dropbox. There was once one called Box, Google Drive, OneDrive by Microsoft, and a company in New Zealand called Mega. A lot of these solutions give you at least anywhere between 10 and 50 gigabytes of data to put into there. So you'll have a pretty huge box starting out, but you can buy more space as you need. But these are some good examples of cloud-based solutions for document storage. Also, you have control over who can get into your particular storage, and it gives you the chance to set up credentials and everything else for anyone who would need access to a particular folder or even a file. I know that for Mega and for Dropbox, you can actually designate access by file, which is really, really nice. All right. So the next thing we're going to go into is looking at the business presence. This is actually how your business looks to the business world, to the people that you're selling products or providing services to. Okay. So presence is more than just the name on the icon. It's a combination of things. It's the service you provide, it's the branding, and also how you run the actual business. So the funnel of success contains service, branding, and operation. So you want to be sure that you're providing the best customer service possible because that keeps people coming back. The branding gives your business an image to attach itself to. So you see WaveRen, you see the icon at the bottom, you'll see that logo. But once you interact with WaveRen, then the service you receive you'll associate with that particular picture. So anytime you see anything that looks like that, you'll think WaveRen. So if I said, I see a red and white can with some funny writing on it, people will say Coca-Cola automatically. And that's because they've had an experience with Coca-Cola that's positive. They've associated that experience with that particular icon. So branding is more than just a picture. Visual appeal, of course, goes into it. Also, the message of what your business does. There is some design and concept that goes into designing your logo. So be very aware of what your particular logo does. And I'll use my logo as an example. WaveRen, the actual eagle points to the right, which is a forward-pointing direction. It points to the right. So what ends up happening there is it associates any type of service with progression. And so that's the idea with the wing pointing to the right. There's several different colors for each particular icon. So you'll see in this one just matches the presentation, but there are different colors for every icon that we have, and it associates with a particular part of our service line. So it gives the message along with the image. And also put a degree of complexity in there. With WaveRen, we did two things. We did something that was sort of, handwritten, hand-drawn. So you see the head of the eagle. That's basically hand-drawn. The rest of that is graphically, created. Someone actually went through and used the computer and created the other elements. But we have something that's hand-drawn. So it conveys two things. One, that we're actually tech-savvy. We do things with a degree of proficiency with technology, not only with computers, but also with how we apply our knowledge. but we are hands-on with what we do. So that's, you see the head of the eagle being drawn there. So that breaks down the logo and the icon for WaveRen. And your logo can do something very similar. So it's a very interesting story you can associate with your particular company. All right, so service, I can't emphasize this enough. If you provide a service, if you provide a product, if you buy real estate, please, please, please be sure to add that element of service, whether it's, to a customer, to a partner, reaching out to people, being available. There's nothing that says I'm in business than having one or more of these elements in your store. So if you have a virtual office or store, that could be a website, that could be an actual address, a shared calendar. So clients, stakeholders, they can go onto a shared calendar, put themselves on your calendar, and actually be able to reach you on that day at that time. And for WaveRen in particular, we have what's called Hotline. We use an application called Slack that allows us to connect with our clients in a very unique way. Much in the way we do the instant messaging in Facebook, we have that functionality there. Also, Slack provides, if you install the app on your phone, it provides you a quick hotline to me because there's a little phone icon by my name. You hit that, and it dials my phone, so you have instant access to it. And it's done for that purpose so that the company doesn't seem to be a 9 to 5. It's 24 hours a day, 7 days a week. All right? So this is the meat and potatoes of making sure that you are not only legal, but also that legality is viable. Can't emphasize enough having an operating agreement. Whether you're a single member LLC, a partnership, or even if you operate as a corporation, make sure you have your operating agreement in place. So it establishes management authority, it defines the roles and responsibility, and because that operating agreement is there from a legal standpoint, it reinforces the concept of limited liability. It actually puts that degree of difference between you and the business. Even though you might be a single member, a sole owner in the shop, you're the only person that's doing the work, it puts that space between you and the business. When you are creating your contracts and engagement letters, make sure that you engage your clients and your vendors in the name of your LLC. So make sure it defines the performance and compensation, all the terms for that. Make sure it defines all the parties, and make sure you listed as a party is not you personally. Make sure it's your LLC. So when I engage other people with the contract, we engage WaveRen and then their business name. So I don't do the personal contract stuff unless it's something for personal financial planning. But other than that, it's business to business. And also, even if you're dealing with your neighbor across the street, make sure as much as you can, make sure you have arm's length dealings. I can't emphasize that enough either, because anything outside of that is modified bartering. So that's what we call in the small business realm. But make sure that everything is at arm's length, that that the business terms are well defined, and that where you have written agreements, that those are observed as much as possible.
Hey, Carlton, if I can jump in again here, we have another question came up, I think mainly for me to answer, and then I got something else to add.
Okay.
Question says, with regard to debt service expense in a scenario, if you own a property 50% with your IRA and 50% personally, and your personal portion is a loan, can you use IRA funds to service that debt? Basically, have the IRA make those payments for your personal obligation. And again, I can answer the question here for the individual asking is you cannot. If you have your IRA make a payment to discharge a personal debt, at best that is considered a distribution, where you're taking money out of your IRA. It's taxable to you, potentially possible penalties depending on your age. You're taking the money out as a distribution to pay that. That's a best case scenario. Worst case, if you're doing it within the LLC, the IRS could say you're engaging in a prohibited transaction by having your IRA pay those bills. I think if they caught what happened if you did this and they caught it that same year, they would probably just have you label it as a distribution. But they could, if they looked at it, say this is a prohibited transaction for your IRA to pay things that you're personally indebted for. So make sure that if you're doing, in that scenario, you want your personal share to come from you personally. If you are going to take IRA cash to do that, to pay part of the debt, you need to first take the IRA cash out as a distribution personally, and then use it to pay it off. That's the proper way to do it. And Carlton, I want to reiterate, going back to your last slide, the operating agreement and how important that is. Again, that's the document that Advanta, if you're wanting to do an LLC with your IRA account, whether it's the checkbook control that we talked about in my example, or if you are forming this LLC with a lot of other individuals, we need to see an operating agreement. And that's how important the operating agreement is to us, and as Carlton mentioned as well, just to have to define those roles and responsibilities. It defines also who the actual owners are. A lot of people go to their state corporation's website or division of corporation's website. They can set up an LLC or they can set up a corporation, but those websites often only ask you to list who the managers are, who the presidents are. They don't ask you to list all of the different members. The operating agreement for an LLC is where that takes place, and that's why we ask for it, and that's why Carlton also is saying how important it is. So, sorry, Carlton, to interrupt there. But again, if anyone else has any other questions, actually, let's see. Another one just popped up, and we can, again, if anyone has more, keep them coming. Said, can one LLC be used for IRA and non-IRA investing, or is it best to have separate entities? Carlton, I'll let you jump in a second. My thought, just quickly, if you were using your IRA and, say, non-IRA funds, your personal money, to invest in the same project, I think it can be easier to have one LLC owned by both your IRA and your personal funds. If, though, you're doing separate projects, your IRA wants to do an LLC to buy rental property A, and your personal funds are going to be used to do rental property B, then you would want to have, if I'm not correct, Carlton, you would want to have separate entities for that, keep that money separate and accounted for properly.
I agree, 100%. That's perfect.
Okay, all right, again, any more questions, please keep them coming. Carlton, go ahead and continue.
Okay, so now we're going to talk about the best part of the presentation. This is called the dance, and the reason why this is called the dance is because we have to partner up for banking, and we have to bank for success. We take a look at the operations, we take a look at the service, we take a look at the relationship, and we need to have a banking partner that understands our business. Regardless of what anyone tells you, banks, until they interact with you, truly don't understand your business. They understand the numbers that come from your business, but they may not understand your business. So we have to build it right. We have to pick a partner for this dance, and they have to. For you would have to understand how you're going to transact in your LLC. Understand the financial transactions that you'll be doing in your LLC. So it's easy to understand you're buying supplies. It's easy to understand that you are paying a salary, but if you're paying rent for something else and you have an agreement there, then understand what those terms mean in transaction terms. So if you're renting a house to have an office, most people won't consider that. If you look from the outside in, so they're like, well, you're using your house as a home office, where you might have your own home, but you're just using the house for your business. But understand those transactions, because those transactions ultimately end up painting the picture of how your business operates and how it looks. Also, shop around for the fees based on basic operations. So banks will roll out the red carpet when you come in. They will give you all the bells and whistles. But just look at the basics that you need for now. When you go in and you're going in for the first time, look at just the bare minimum of what you need. Also, consider the long-term cost of those bells and whistles. So if you go in, I know many banks now will offer you a debit card terminal. They'll offer you much more than a toaster nowadays. So consider those costs, because you may end up getting something that you're paying for that you may not use immediately. And also, I can't emphasize this enough, open only what you need. There are costs associated with opening an account. So if you are sure you can meet the bank deposit minimum so they won't charge you fees, that's all great. If not, consider carefully the accounts you will need to open to operate so you'll minimize banking costs. All right? So staying on the path. This is something that I don't think a lot of people understand about banking for personal and for business. But be very mindful of these rules. These will actually save you a lot of headache and a lot of trouble, especially when it comes to overdrafts and things like that. There are only 4 banking days in the week. There's Tuesday, Wednesday, Thursday. We're actually in the second banking day. Friday, Saturday, Sunday, and Monday, for banking purposes, are considered one day. Now, this doesn't mean that banks stop operating from Friday to Monday. Banks most certainly do operate on all 4 of those days. But for accounting purposes and for movements of money from institution to institution, then keep those days in mind as you do transactions, because when you're talking about transfer money out, in 2000, they put in place a rule called Century 21. So that means once you pay something, it goes out immediately, and everyone has seen this. But the other part of Century 21 has not been enacted yet, almost 17 years later, which is the immediate deposit. So it'll be instantaneous banking, and this whole structure of bankingness will go away. But since we don't have that deposit rule in place, this is still very important when it comes to receiving funds, except for certain ACH and wire transactions. But if you do, general transfers, then this is something you would have to consider. Also, use accounting software to track your transactions, and also develop a cash budget so you can keep a close eye on what you're doing month to month, and make sure that your transactions look sort of uniform in the very beginning. So you will know at a glance what your typical transactions are. Anything that falls out are special cases, and you'll know what the special cases are. Also, can't emphasize this enough, this is probably one of the most cardinal things that happen within small business. At times, people do commingle funds, but do not commingle the funds with your LLC and your personal bank. So if you have to take money out of your business, take it out as a withdrawal, similar to what happens in an IRA. Take it out as an owner withdrawal, and then put it into your personal account, and then go do whatever you have to do with that money, but do not commingle the funds, because it's very hard what it does, it actually unwinds your LLC, because people will say, well, this person here is vicariously living through the business. So be very careful in doing that.
Hey, Carlton, I can chime in on that too. I would agree wholeheartedly. When you got your IRA involved, you definitely, if it's your IRA only, you commingle your personal money in with your IRA LLC money, you're going to have a definite issue with the IRS. Did have a couple questions. I wanted just to quickly maybe address those. Someone asked, does the accounting for a Checkbook IRA LLC to buy options or covered calls present any difficulties? And I'm not sure, Carlton, if you can answer that or not, or I would only guess that if you're doing a Checkbook IRA with an LLC to buy options, that you may be having that LLC set up a brokerage account in order to do that, which is fine to do. But can you think of any other difficulties that this might happen?
I can't see any other difficulties. Most of the reporting that's going to be done in your IRA is done by your trustee. So the accounting part, if you get a brokerage account, that would feed into the accounting system, and that will set up just fine. So I don't see any difficulties in that.
Okay. And Advanta, as the IRA owners, or the IRA custodian, we will report to the IRS a fair market value every year for your account, which is in this case the value of the LLC. So there's really no issue on that end. Another question, someone said, I have an LLC and then an account. I think it's an LLC account with a local bank. They pay an interest of about $50 a month and no charge. Money just goes back into the account. Is that okay?
Yeah, I don't see any problems with that either. If they're paying interest of about $50 a month for your business, that would be interest income. So in the financial reporting system, in your bookkeeping system, it's going to show up on your income statement as interest income. So there's no problem with that. If they don't charge anything for the bank account, that's great. That's perfect. That's a perfect scenario.
Agreed. Yeah, we have, just to let everybody know, we have a couple more slides left. So if you have any other questions, please make sure to get those in here. Thanks.
Okay. The next thing is on a planning tip, make sure you do a checkup every 6 months on where you are in banking. I know this sounds kind of, it can be kind of droll at first, but once you start paying attention to how your needs are changing for banking, you'll be surprised at what you'll actually end up changing as time goes on. So note the changes in how much money you need to operate your business. So operating capital requirements, fancy terminology for making sure you're paying attention to your funding needs to avoid unnecessary fees. Making sure that anytime that there's a need for funds, which is called capital call, that you have adequate funds in the bank, or that you've made an agreement with the bank to give you a loan or line of credit. Make sure you review your banking needs at least twice a year to make sure that you have the proper services in place for your business. Make sure that you not only have the demand account ability, the checking account, but also if there are any other things that will link to your bookkeeping system, anything that would link to your point of sales, any of those services are included in your banking package. And also, don't be afraid to ask the bank for special promotions. And the reason why you do this, number one, it really puts your banker to work. It forges that personal relationship. And then two, the bank has some pretty sweet stuff when it comes to making sure you're happy. So don't be afraid to pick up the phone every once in a while. Call your banker and say, hey, what do you have for special promotions this month? And you'll be surprised at the wonderful things that they'll have ready for you in your business. Okay, so the last part of this slide presentation is leveraging relationships. So this sums up what really happens in your business network. So your network determines your net worth. Make sure that as you interact with your stakeholders, your partners, your customers, your vendors, that you explicitly use the name of your LLC, because that's part of your relationship. That's part of who you are. Your business name is not just a logo on a business card. It is actually who your business is as an entity separate from you. Make sure you communicate yourself as a member or manager of the LLC. On my business cards for WaveRen, I actually have a title that is more so a functional title, and that's perfectly fine too. But make sure you communicate yourself in official correspondence as a member or a manager of the LLC. In contracts, make sure that the contracts are titled in the name of the LLC. And also, anywhere you go, make sure you display the name of your LLC prominently on business cards and on letterhead and official correspondence. I can't emphasize enough that this adds to the legal, operational view of what your LLC does in the business community. It actually gives you the ability to look, to operate, and when people interact with you, experience the feel of being a part of a business instead of just a small shop on someone's kitchen table. So for us, legal looks controls success for limited liability companies. So if you have any questions, this is my information.
Hey, Carlton, great presentation. I got maybe a couple of other questions came up here that we'll get to. But again, so I think really great information for people, again, whether you're using an IRA LLC or just a personal LLC. But let's see, the question we had to come up, we'll again encourage people to continue to ask some more. Someone said, I formed an LLC for my real estate business but don't have consistent income coming in yet to open up a business account. The 2 commission checks received are paid in the name of the LLC. They both went into my personal bank account. Will this be a problem at the end of the year tax-wise? So they have income for the LLC, made to the LLC, but just didn't have a business account open yet and just deposit the checks personally. Is that going to be an issue tax or even maybe liability-wise with the LLC?
If you're just starting out, no. And the reason why is just make sure that you document, and I would say even keeping copies of the checks and documenting the situation. The fastest fix to that, if you don't want to open a business account just yet, is to go and open a second personal checking account and use that only for the business. I actually started that with WaveRen. I actually went to the bank and said, hey, I want to open a checking account personal, and I used that personal account to build the funds for my business, and then I switched everything over. But that particular account was only used for business. And as a matter of fact, I went into the online banking application and changed the titling of the account to reflect the name of the business. And the reason why that's important is because if someone's going to look at that, if an IRS auditor is going to look at that, they're going to say, well, at least they're tempted to make that separation of themselves from their business. So do it that way first. Also, on the planning tip, If you want to take a look at certain business accounts, talk to your bank about, simple checking accounts. They're actually titled simple, S-I-M-P-L-E, simple checking accounts. And what they do is they're small business accounts that have a low fee, probably no more than $10 a month. If you go ahead and place like $60 in there, that covers 6 months. Just put it in there, don't touch it, and the bank can just take its fee. So you just do it that way until you're able to have that consistent income. Not to mention all the bank fees are tax deductible anyway.
Carlton, maybe here's a good question. What do you think is, just kind of wasn't a question for anyone listening, but one I had, but again, other people can certainly add more as we go on, but what do maybe you see the top, I guess, one or two things that you see commonly done in error that people are doing with their LLC that's putting them at risk for either tax liabilities or just losing their credit protection of LLC? What are the one or two things, most common things you see people do that really they shouldn't be doing?
Well, the first thing that I see is I see business owners actually using their LLC for personal reasons. So they will go and of course, buying supplies and all that stuff is well and good, but, trips to buy clothing, to buy car tires, et cetera, unless you're using that vehicle explicitly for business purposes, don't do it. Just simply don't do that. So that's one thing. The second thing I see is not having documentation in place in the beginning to do business. So you'll have individuals establish an LLC, but no tax ID number. You'll have individuals have the LLC, the tax ID number, but they won't go the next step further and establish the state, and I didn't have in this presentation, but the state sales tax ID, and then you can also get from Dun & Bradstreet a free DUNS number. So create and again, when we come to this world, we get our clothing and everything else. We get our Social Security number, et cetera. Do the same thing for your LLC. Make sure it has all the proper documentation and all the abilities to transact in the world. So tax ID number, DUNS number for credit, also sales tax ID. Although you may not use it immediately, just have it so when it's time to report sales tax, you can.
All right, we had another question come in. I'm not sure if this is one you can answer, Carlton, or not, or this might be a better question for a mortgage broker. But question says, if I were to start an LLC, not an IRA LLC, but just a regular LLC, fund it with 20 to 30% they would like to put down of a planned rental property purchase, can I get a credit or mortgage in the name of the LLC when the LLC is putting 20% of the purchase down, and if so, how do interest rates compare with personal rates? People do it all the time. I don't think that there's any issue legally wise with doing that. You form an LLC to buy rental property, you deposit cash into it, you use some of that cash for your down payment. I certainly think you can get a mortgage in the name of the LLC that just most likely the bank is going to want to have your personal guarantee on the note. I don't think they'll have an issue with issuing a mortgage so long as you're personally guaranteeing and therefore personally liable on the note. But Carlton, I don't know if you have any insight or thoughts on the interest rates. I would think the interest rate's going to be a little bit higher than a personal rate, mainly because it's an investment property, not necessarily because it's an LLC versus an individual as the buyer. But do you have any kind of experience of people using the LLCs to invest in real estate? Any differences that the LLC causes or than have to just done the purchase personally?
Actually, I haven't encountered anything that would cause a difference in the accounting or in how it operates legally. The LLCs with the clients that I've dealt with mainly deal with titling for the mortgage, so they want to put it in the name of the LLC so that the property has that legal liability protection. So they want to put the asset in the LLC instead of them holding it personally. So again, and to talk about and to touch on the credit mortgage, again, I agree with you. Most banks would want to get that personal guarantee from you. So as time goes on, there are two things you can do if you want to actually establish your LLC as a viable credit entity. The first thing is to talk to your bank. And the reason why I say that is because they will tell you what's necessary to start business credit. The second thing is to talk to Dun & Bradstreet. And they also have, now I will tell you this, they will sell you anything credit-wise, so be prepared for that particular spiel, but at the same time, get the information that you need to create a viable DUNS number, a credit file for your business. So even though you can't do it today when you first establish it, down the road, you won't have a question as to whether you can do it. You can do it based on the fact that you've built up enough credit over time for your business.
All right. Well, that's kind of running up to the end of our time. We got one more question that's going to come in, and then we're going to have to move on and close the webinar. But again, here's just to make sure everybody has Carlton's contact information here if you need to ask other additional questions. Person said, my H&R Block tax advisor advised against getting real estate commission checks in the name of my LLC, saying I would have to pay 30% small business tax automatically on top of regular income tax. Does that sound right?
And
again, if it's something not quite sure, we can always ask them to give you a call. Or
yeah, I would say give me a call because I would need to know some of the details behind the reasons why they advised you to do that. Again, tax advisors are, you have different flavors of tax advisors. You have those who are conservative. You have those who are a little bit liberal with applying IRS rules and regulations, and then you have people who know the road. So depending on the conversation you had with them and the conditions and the circumstances you described to them, they may or may not be correct. So it might be better if you got in touch with me to get that answer.
Okay, well, again, Carlton, I want to thank you very much for coming on today. I think we've got some, again, great information for people. They can get a hold of you. Obviously, you can get a hold of us here at Advanta IRA, 800-425-0653. Again, my name is Scott Maurer, Director of Business Development, but there's certainly many other people here in our office who can help answer your questions on IRAs, buying real estate, investing in LLCs, but we, again, happy to have Carlton on today to give you that other piece of information that if you are looking to do an LLC with your IRA, or even, again, if you're doing this on a personal basis, some great tips, tricks, best practices to use for your LLC in making sure you stay on the right side of the law, make sure you keep everything in good order, and you can sleep at night, obviously, in doing that. So, Carlton, thanks again for coming on.
My pleasure.
All right, everyone who's listening, again, thanks again. If you're listening to a recorded version, please reach out to either Carlton or myself to get you other great information. Thanks.
Thank you.